All right, we are live. Welcome everyone to what I hope is the first of many quarterly analyst calls. We're kicking things off with compounds. This is a new format that we've been testing out at Messari, given the long form research and the deep asset diligence that our analyst team already does. Ryan Watkins authored a fantastic quarterly report outlining everything that's happened in the broader compound community in Q3. And we're going to do a few of these. Rob has been a supporter of ours and very keen on upgrading the quality and consistency of communications with decentralized communities. And this is kind of like a V1 that Compound Labs has helped us bootstrap. In the sense that we truly believe that these decentralized networks are going to need independent analyst coverage at scale, but it's almost always a jump ball in terms of who's going to do the work and who's going to parse the Discord servers and the governance updates and the technical upgrades and put together the Dune dashboards. What we did with this first iteration and what Watkins did in particular and really took the bull by the horns is come up with a really compelling 15, 16 page overview of Compound's Q3. So we have Rob here today for the V1, which we're excited about. He's going to answer some questions. I'm going to ask questions of both Watkins and Rob. In the future, and even during this call, we want to also encourage folks from the Compound community, if they have a question or they have something that they'd like to comment on, we'll have the ability to add that person to the screen as well. So fire away, and hopefully we'll make this a unique V1, but hopefully the first of many experiments that we're going to do in community analyst calls with Messari analysts. Watkins, with that overview, I don't want to bury the lead or step on your lines because I thought the report was phenomenal and want you to be able to just kind of go over a little bit of the process that went into it and then the key takeaways for Compound and what we're going to talk about today.
Yeah, sure. So with that background, basically what we wanted to create was a quarterly report that was useful not only to people who are investors or researchers, but also to people in the community. People are making decisions, people are voting, people are developers. You need like really high quality data, not just on like the different KPIs and financials in the community or in the protocol, but also what's happening in governance. What are some things that are being worked on that you look forward to? What grants have been made? So we want to make this basically like the first report you go to after you have kind of read like protocol documentation or a white paper, and you actually understand like what's going on in the community. So that's actually what we set up to do. And let me share my screen so you can kind of see the general format of this. One sec. All right, can everyone see?
Yes, perfect.
All right, cool. So the way we broke this up is we broke it up into about 4 sections. The first section is just a quick intro on Compound, really quick paragraph, just giving people an idea of what Compound is and where it's been. Once we have that, we start diving into kind of the KPIs and financials. We break it into macro and micro. So macro would be what's going on at a high level in compound markets across every single asset they support. And tracking some of the KPIs, things like loans, deposits, originations, interest income, things like that, as well as like corresponding charts to see how all this stuff is trending over time and where it's come from. And micro, I think, is where it gets most interesting because this is where you dive into specific markets that Compound supports and get to see in detail what's going on. So here's an example of the USDC market, for example. You see everything from the different parameters for these assets to how they're being used and what is the results of that usage and activity from quarter to quarter. Once again, just a bunch of interesting charts, much of which we can kind of dive into as well as we kind of go through this. And we do this for basically the major markets in Compound that Compound supports, where you want to know what's going on here. And finally, kind of get to governance key events. So, if the first section was just giving you a high-level overview of kind of all the numbers, here's all of the qualitative information about what's happening in the community. So the key events. So obviously at the end of the quarter, there was the distribution bug, which we kind of detailed here, as well as a bunch of different governance decisions in the quarter. So there were 11 different proposals that were passed and executed in the quarter, as well as 4 different collateral types are added to Compound over the course of the quarter as well. And kind of just going into just really quickly kind of what those were, and then providing links to Compound forums so that you can go and learn more if that's what you're interested in. Grants program kind of similar, highlighting the amount of grants funding that's come out of the Compound grants program, as well as some of the largest ones here. And then finally, just kind of roadmap things, right? Like what's coming next. Much of this stuff was announced, like Compound Treasury, Compound Chain, just giving a sense of what's to come and what people who are stakeholders in this ecosystem should be looking out for. So that was just a report. I think in general, one challenge that I think protocols have as they start to scale and start to account for significant economic activity is that they don't have a centralized team that is providing a kind of CFO or investor relations function. And you kind of need people in the community to step up and provide that role. And that's exactly what we look to play. So that's kind of a high-level overview of kind of what the report is and kind of the work that went into it and what we want to achieve. And I guess now we can kind of just dive into some of the details. I guess first starting with macro, and I guess we can get Rob and Ryan to the extent you guys want to add anything. We can hop in as well. Let me switch screens.
Are you going to present another screen, Watkins? Okay, there we go.
Yeah, do you see it?
Yep. Cool. Mm-hmm.
All right. So the biggest thing this quarter was, to start the quarter, we had, so it was July 1st was when the quarter began. Obviously in May, we had the pretty big market correction and kind of subsequent slowdown activity. If you look at the Q2 metrics kind of here, you see, liquidations at an all-time high. You see loans having fell quite substantially by the end of the quarter. And just kind of metrics across the board kind of having fallen after reaching kind of the highs of the year in that quarter. So that was kind of where we were to start the quarter. And then as the quarter kind of progressed and kind of market sentiment picked up, we kind of saw metrics start to really rise across the board, especially in the latter half of the quarter as activity kind of picked up. And we're kind of diving into what was actually driving this. So if you look here on this page, it kind of just shows you just like the massive dip we saw just as a result of the kind of market crash from May to July, and then the uptick here. And I think there's pretty much, let's say, maybe 3 big drivers of this. For one was obviously just more favorable market conditions. 2 was rising collateral values. So as the amount of collateral in Compound increased, as well as the value of that collateral increase, it just provided more capacity to take out leverage, as well as kind of lower borrowing costs. So one thing that was interesting, and we can dive into specific markets as well, because it's kind of just an aggregate number. Just kind of across the board, we saw borrowing rates actually hit the lowest levels in Compound's history. You kind of see here what it looks like both with the comp incentives as well as just standalone. And I think this is really caused by 2 things. I mean, for one, we had obviously the massive drop off in kind of loans outstanding at the end of the quarter. But 2, I think throughout this year, we've seen deposit growth really outpace loan growth. And that causes utilization rates to go down, which we can kind of see here. As you see in January, utilization across Compound markets is 60%, fell all the way to 40%, right? And that's played a significant role. So those were kind of 3 factors that I think cause loans to really pick up throughout the quarter. Just more favorable borrowing rates, better market conditions, as well as rising collateral values. Deposits were a similar story. I think there's really broken down to 2 things, and we can go into specific markets so you can kind of see this. So obviously, why are deposits increasing? It could be for 2 reasons. One is because, let's say you had a ton of ETH in the pool, and then the value of ETH doubles, then deposits would double as well. So there's certainly part of it as well, but also people were just depositing more ETH into Compound, and we can kind of see that when we go into the deep dive on kind of ETH markets. what was causing there. And then another thing just around deposits before we kind of dive into the specifics around the different markets was there's also like kind of all-time low rates for depositors as well for different markets. Just before we go into the individual markets, I don't know if you want to jump in anywhere, Robert, and kind of provide your perspective on what was happening in this quarter. I mean, obviously there was a ton of activity, from I'd say probably May until August, really.
Yeah, I'll start off by saying, it's really exciting to see these aggregate charts and this presentation of this information just in this fashion. So historically, there have been dozens, if not hundreds, of individual dashboards created by members of the community. Some of them funded through compound grants, some of them built by just members of the community and hobbyists. And it's really, I think impressive to see the content and data that has been brought together in this report so far, because I think it's without a doubt the most comprehensive and complete and effective and insightful information that I've seen so far. And so, before going into the actual substance of the, information, just want to first, start by saying how cool it is to see this being presented. And hopefully, everyone listening to this call and everyone in the community is able to sort of use this as governors of the protocol, as users of the protocol, and as just market participants. And so, love seeing this report. And, for background, this was funded by the Compound Grants Committee. So big shout out to that organization. And, hopefully we get to see these numbers and go through this report every quarter. So with all of that being said, I think the big narrative event of this quarter is, and, Ryan Watkins spoke to this a little bit, which is the quarter started off after a massive crash in crypto prices. And throughout this quarter, it really was a story of crypto prices returning, a risk tolerance of the user base returning, and capital flowing back in the compound. The liquidation count, in May was extremely high. Utilization and leverage across the board was wiped out. And in a lot of ways, this quarter, there was few direct changes to the parameters of the protocol. There was a lot of new governance proposals that were released, which did a lot of incredible things. But the actual markets and the collateral utility and all of these things was relatively consistent. And so all of the change in the market usage and the growth mostly came from external factors as opposed to factors that were internal to the protocol. When I look at the governance changes that the community implemented, there was so much that happened this quarter. There was improvements to reduce gas costs. There were the first use cases of adding community contributors that got directly paid by the protocol. The governance process was standardized and streamlined by reducing the proposal threshold to make it easier to add new governance proposals. There was 4 assets added, although the usage of those 4 assets started off relatively small. There was a reimbursement proposal for users that were liquidated borrowing DAI from 9 months ago, which was incredibly exciting to see come through. And there was Prop 62, which occurred at the very end of the quarter, which didn't impact any of the underlying markets or any of the actual usage of the protocol. It just over-distributed comp tokens to different members of the community. So when you look at the list of governance actions, most things didn't change. This wasn't a quarter that had a lot of, big modifications to the asset base. The utility is, collateral factors, the interest rate models, the reserve factors. None of these things fundamentally changed. So, stepping back, all of the changes in the growth of these markets didn't come from internal factors, they came from external factors. Now, I think in Q4, one of the things that, I'm looking forward to is starting to see internal to the protocol changes starting to drive new growth. And so, there's a conversation that's happening right now on the forums and in governance, which is Gauntlet is starting to set new risk parameters for the protocol. This could start to lead to, improvements in the capital efficiency and the usage. But we'll have to wait and see. And so, when I look at this quarter and these growth numbers, a lot of it came from, in my opinion, the price of crypto, the value of collateral, and users' willingness and passion to either earn interest or borrow assets from the protocol this quarter.
Yeah, appreciate that. Yeah, sorry, go ahead.
No, I was just going to ask Rob, and obviously we're hoping to get broader community feedback on this. The very first thing that struck me when I saw the draft of this report was that very first snapshot, right? It's exactly what you would expect as a traditional investor or market participant if you're trying to understand what the sequential growth or kind of periodic growth has been for a project. And we talk a lot about real-time KPIs and the ability to kind of monitor on-chain transactions without having to wait for quarterly reporting or annual reporting or anything like that. And we talk about it as a benefit, but I still think it's pretty undervalued. And this is something that Dune, who we actually pulled quite a bit of metrics from as part of this exercise. I think it's one of the primary value adds that we have to work with. Given that so much of this data is open and so many of the tools are open, you can basically pick your period, but there's still a lot of value in actually monitoring periodic growth, whether that's week to week, month to month, quarter to quarter, year to year. And it seems like it's been an underbuilt resource for the community. This is the first time that I've seen an actual snapshot that kind of looked quarter over quarter for the last 6 periods to give you a sense of trends and the high level trends outside of just the day-to-day or week-to-week swings that happen in DeFi especially. The question though is, are these the right metrics, right? And so I'm curious, as you kind of look through the report here, did Watkins kind of cover everything that you expected or kind of the key drivers that you would have liked to see? Or are there additional metrics, and are there other opportunities for basically community members to fork in suggestions and kind of proposed KPIs that could be included in subsequent reports, so we have a more sophisticated mental model for how to track this particular asset and maybe DeFi lending protocols more generally?
I think that's a great question. I mean, I think there's probably lots of different insights from the community, and I'm excited for everyone to read through this report, see, if there's anything missing or what they want to see differently or what's useful as they make governance decisions or usage decisions of the protocol. But I think, in terms of covering a lot of ground, this is as good of a start as it can get. I would say that, this is by far the most comprehensive reporting of a protocol, financials and usage metrics in all of DeFi. And, I think it's a gold standard. And so kudos.
Good job, Watkins.
Thank you.
A lot more of that. A lot more of that in 2022. Yeah, why don't we talk a little bit about some of the kind of additional work that's been done just in terms of standardizing this, right? So Watkins, our team internally is thinking about, once we've done Compound, it might be much easier to do other DeFi lending protocols, right? But DEXs are going to be different. NFT marketplaces are going to be different. Yield aggregators are going to be different. Are there like one size fits all reports and kind of consistency between different quarterly reports that you'd be able to put together for a crypto network with a governance token, or are these assets too unique to kind of lump together? How do you think about kind of creating the process so that not just you individually, but any really good analyst could kind of follow a similar script and put together a similar quality report, which is the ultimate goal that we have for the hub?
Yeah, so there definitely are some similarities across reports. I think for any DeFi protocol that operates like a marketplace, which I think many of the different exchanges, lending protocols kind of fit into that bucket, you could structure a report very similar. That said, I think we also see this in kind of the stock market as well, with publicly traded companies. not everyone kind of reports their financials and KPIs the same way. And I think it'll be very much be the same in DeFi as well. So for example, if you were doing a report on Aave, you'd probably have to also include a section for flash loans, for example, which is a little bit different, right? And there's different like tweaks you have to make depending on the protocol you're looking at, or the kind of sector you're looking at as well. So I do think that once you have like the basic framework, it definitely becomes easier. Like this will be much easier to do a report for all the different lending protocols in DeFi. Now that we have this, that being said, there are different adjustments we make, especially as you start to go into different sectors. And I think a lot of protocols are different. Not so much to say, like for example, what does this report look like in next year when Compound Chain launches, right? And then now we have to break out what are outstanding loans split between Compound Chain and Compound on Ethereum, right? So I think these reports will be constantly evolving, and we'll be constantly thinking about different ways to keep them relevant and keep them comparable to each other as well.
Yeah, and I think that brings up an interesting point, because the interesting thing with this report is, whether this was someone from the broader Compound community that wasn't affiliated with a research and data firm like Messari, or whether this was Compound Labs, or whether it was us, which it was, hypothetically, this report could have been done pretty much exactly the same way and at the same depth and quality, regardless of the entity that was trying to pull these numbers. And that's such a radical change from kind of traditional public company reporting, because these networks allow people to kind of create their own dashboard and kind of synthesis of what happened on any period of time. When we do get to things like forks or different sub communities that need to be supported, you can see some natural additional research and kind of like almost like forks of certain reports that could materialize, depending on the granularity and the depth that communities want to go as they're looking at different components of the protocols. You could apply this hypothetically to how Compound grants treasury is working, or how Compound is performing versus other DeFi lending competitors from an economic standpoint, when you're talking about the yield farming incentives and other growth hacks. I think what I'm going to be very curious to see is when we have that first split between Compound on ETH and Compound Chain, whether this becomes two reports or whether it continues to be one aggregated report, or if you have a few different groups that are working on different subsections of the reports and specializing to make up the kind of cohesive whole and atomizing the different components versus having it all done by one in-house top-down organization. And so maybe Watkins, is worth talking about the how modular this is and kind of where the opportunities are for other community members to actually take on some of this work and help scale it for not only Compound but other communities, particularly if they have an expertise in a niche like DeFi lending and might be able to do kind of repeatable work across a few different assets.
Yeah, for sure. And I think you made a great point about how, what's so radically different about quarterly reporting, or just reporting in general for DeFi, is that all this data was available on chain and in public forum. So none of this stuff was private information. None of this stuff we needed privileged access to put together. And probably more important than that, all this stuff was available in real time. So you actually don't need this stuff to be reported to on a quarterly basis. But I think that the real benefit of this is just being able to bring all this data to the forefront and make it more transparent, so that people aren't scouring 100 different dashboards to go and learn what's going on, as well as providing a lot of the qualitative information around these numbers that makes it much more rich. And I think really that also speaks to like where people can help in the future. This is kind of and this is kind of where it gets more modular. So to kind of dive in, obviously we kind of went through like a lot of the macro markets, but just kind of an example of how modular this gets. So, we zoom into something like USDC, and we kind of have a similar layout here. So in theory, you could have people that are just like experts in, and there's different ways you could take this, of course, but there's people who are experts in certain markets, right? And they can create all the different data we have here. So here you have like borrowing rates for USDC, which I think is a really cool thing to do, because then, now you can track like basically stablecoin yields across lending markets, which I don't think people have done before, which I think is pretty cool. Beyond just kind of diving into many of the different individual markets, also, it's actually another cool thing I want to show you as well. And so here's an example of, one thing we talked about earlier was how, deposits outstanding rising was a factor of two things. It was, one, just prices rising, and two, people depositing more native units. And here you can kind of see that breakdown of like, okay, well, at the end of July, here's how many native units there were. And now there you see where it is today, and then what the dollar value of it was, relatively. So you can kind of see like it's both it's a combination of those two things, right? We're kind of diving more into the modularity. You can also have someone who's just entirely focused on governance, right? And really being able to, not only just like synthesize all these proposals, but also synthesize some of the conversations that people are having in the forum. So one thing that is not present here on the slides, but is in the report, is a summary of different discussions that are happening in the forum that have not yet materialized into proposals. And that is actually, I think, probably some of the even more important stuff that'd be in a compound quarterly report, because this is stuff that is going to be potentially coming or impacting compound protocol in the months to come. And you could just have someone who's just really into the weeds on these different discussions, kind of dealing with that. And similarly for the grants program as well, like maybe just having someone from the grants program that is just really just focusing on that and can give us really high quality insights into what are some of the most exciting grants that the program has funded, and kind of what's going on there.
We have a couple questions in the chat that I want to get to, but I just want to double click on this point real quickly. Again, going back to kind of comparing like a legacy financial market versus a DeFi market, you would typically direct a question like this to Rob and say, hey, what are the assets that you're thinking about supporting in Q4, when XYZ token? And the truth of the matter is, Rob and team would just kind of throw up their hands. And this is something that I think has to be tracked at the discussion and proposal stage. So if you had looked last quarter, for instance, maybe our discussion of current unincorporated proposals would have been around things like, okay, when are we going to see Aave Sushi Wi-Fi added, as collateral assets to compound? Well, then you see in August, like this did pass, but in this particular report, there are going to be similar discussions that have Q4, Q1, Q2 ramifications that are ultimately going to impact the economics of the decentralized organization that is Compound. So I think if you're not in the weeds here, this is where a lot of investors within DeFi more broadly are generating a lot of alphas just in this information asymmetry. And now you at least have a form factor that can help level the playing field and kind of smooth out those asymmetries. So people, without being buried in Discord 24/7, will actually have a sense for what's going on a day-to-day basis.
Yeah, I think one thing I'd also add there is that it also helps people who are new to the community and want to get involved when they can just very quickly get up to speed on, okay, what are the major different discussion points in this community? What has happened over the past quarter that was really important, and what are the outcomes? That's also really good for people that just want to get involved but don't know where to start.
A couple minor questions before I go back over to Rob. So do we use a UTC timestamp for measuring the quarter, Watkins?
We did.
Okay. Because I think one of the points that Ryan Swanson asked in the chat and Jake Bressler talking about standardization, right? So one question is how standardized are these data points right now? I know we kind of looked at used a little bit of our own methodology, but also looked at Dune and Token Terminal. How do we think about doing the standardization work so that if we produce a compound report and then in Q1 or Q2 maybe there's another research outlet that does a similar report or collaborates with us, how do we come to the same number, right? Because you always have a consistent revenue and profit number on your Bloomberg terminal, but you could, depending on your methodology, get to different numbers and have different definition of different line items depending on which curator you're relying on right now. How important is standardization? And Rob, I'm going to want you to comment on this as well, but I think Watkins first, just in terms of what we actually did here.
Yeah, so I think standardization is incredibly important. I think one of the things that I think we've seen, particularly among like the DeFi investor community over the past year, was people getting excited about the fact that these protocols were producing income. But there's always been kind of like disagreement over, one, what actually is income and what is not, and then two, how to interpret that, right? So, for example, what is considered revenue and what is actually considered profit? That's not clear. Some people disagree on that. Should token incentives be considered an expense, right? So there's not a lot of agreement on that. So there's definitely things that we consider. And want to make sure that even though that these protocols do have different nuances around how they work and the services they provide, still wanting to make it to the point where this stuff is still comparable. And obviously you can never be perfect at it, right? I mean, even in traditional financial markets, you have like gap reporting, and in theory that should make people all this stuff far more comparable, and it does, but it's not perfect, right? And sometimes you need to just kind of dig a little bit deeper into the numbers and understand kind of the differences in how they're reported across different companies, or in this case protocols.
Yeah, Rob, what do you think? Because there's always you brought up the point that there are dozens of dashboards that will kind of pick and choose how the data is sliced, but there's by definition very little consistency. And because this is an open community, number one, and number two, it's a very rapidly evolving community at that. You don't want to shoehorn standards in prematurely when things are still getting fleshed out. So do you kind of view this as a scenario where someone just takes the ball and kind of pushes it forward, and that's going to be not only 80-20 but probably 90-10 rule for a while we kind of rally around that, and then there will be tweaks over time and adjustments over time? Or do you think that this is work that should be done earlier?
No, I think it's important to have standardization, simply because you can have one source of data, and the data around the compound protocol is transparent, it's open source. Theoretically, anyone out there can pull all of this information over, right? But if you have two people pulling the same data, they'll present it in radically different ways, or have very different conclusions, or they'll focus on different things. One user might go really deep in saying, "Oh, compound is all about liquidation risk," right? So let's look at like that. And one person might say, "Oh, it's all about interest earned by suppliers of assets and borrowers," or whatever, right? So having consistency, gives you a chance to like bring it all together, and compare things across protocols as well. The first approach to consistency that DeFi had in a lot of ways was DeFi Pulse and TVL, which, it's funny because it's a single metric that tried to explain every single protocol, even though they were all radically different protocols with radically different goals and purposes. And it was great because there was a standardization. So everyone can say like, "Oh, it's all apples to apples. Like just look at TVL and you'll understand any protocol." But it's a bad standardization in that it loses all of the nuance, right? A great example is, a system like Compound, TVL might be bad, right? Why? Well, when people borrow from Compound, there's less assets locked inside the smart contracts and TVL goes down, right? And it loses like a lot of the granularity of like what's actually happening in these systems and what's good, right? And what's bad and what are you actually trying to track. And so, I think that there's a lot of value that gets created to have a standardized and repeatable process, ideally for Compound, ideally for other protocols, ideally for the whole ecosystem, as opposed to everyone one-offing it, right, and reinventing the wheel each time. And so, if this becomes the standard for Compound and as well other protocols, fantastic, because this is a, granular look at the most important, facets of the Compound protocol. And, as I think Ryan, and Ryan mentioned before, people can complement this, right? Like, folks can say like, oh, like, maybe like a different protocol team lists an asset in Compound. They could do the same type of reporting on their asset, right? So let's say, widget team adds widget to the Compound protocol. They can, complement what's already here with like a deep dive on like how widget's doing inside the Compound protocol as well. And so, I think this is a great trend. I think the more information that users and governors and market participants have, the better. And, if it's standardized, it'll just be easier to understand.
A good question in here from Roger S. Is around some of the valuation modeling work that we've done at Messari as part of our enterprise research tier. That's notably absent from this particular report. And I think that's intentional because, at least for this V1, you want to be able to strip away just the facts, ma'am, like what has happened historically and like what is the current state of the project and kind of there's a little bit of subjectivity in terms of curating some of the qualitative, like the governance updates, the roadmap, things like that. But it's not necessarily forward looking and you're not slapping a buy sell rating or risk rating or anything like that on. Do you think Watkins, I'd love to hear from you, and if anyone else in the community has thoughts, please drop them into the chat. But Rob, I mean, should these be collapsed? Is there, do you think there's value in separating out like the backward looking from more of like an analyst like rating and an evaluation model and a forward looking report, or does it not matter because ultimately this is something that's going to be developed organically from different groups?
I think it'll be developed organically. One of the crazy differences between a decentralized protocol like Compound and a traditional company is when it comes to forward looking, a traditional company would say, here's what we think about going forward. Here's what's in our pipeline, right? With something like Compound, the forward looking is actually a whole community, right? Anyone can actually contribute new ideas, new code, new direction. And so, one of the things that, I could talk about is what's Compound Labs doing, but that's only a tiny subset of the community. This past quarter, almost all of the development was done by different community members, right? And so, what's most interesting about it is, I don't think you have to, collapse forward looking in, the state of the protocol. I think the state of the protocol is a perfect jumping off point. And there's going to be a lot of different opinions on what, the forward looking is, whether it's, analysts from Messari, whether it's different members of the community, different teams developing on the protocol. I think we'll get a lot of different opinions. That's actually one of the coolest parts.
Yeah, and it's a good point because your like fidelity of information and kind of predictions in terms of future parameters goes down because you don't have a centralized team saying we are going to be doing this. We as an executive team are going to be held accountable to our board based on these deliverables and this forward guidance, right? Versus, no, here's the snapshot in time. Here are some of the ideas that are percolating through the community. But ultimately, everything is going to be subject to a vote when it comes to these different parameters that could move the needle one way or the other. So you might be able to build a valuation framework, but not necessarily include input. I mean, I suppose you could with something like a prediction market, but that's starting to get a little bit ahead of ourselves. It's something where our valuation framework or our model, if we had certain assumptions in there, is going to only be as good as the next analysts in terms of our opinions or kind of directional assumptions, even if we put the model itself together and give people the jumping off point, which I think is the goal. So that might be something that's done in parallel to this, but I think there's value in splitting the two from our perspective. Watkins, what do you think?
Yeah, I agree that there's, I think you want to split these two because I really think the purpose of this report is to be much more like a quarterly report that a company would put on a site that could be part of like SEC filing, where you're just reporting on kind of what happened in the quarter and just giving people some kind of discussion analysis around those numbers. Whereas something that's more forward looking is very much more like a equity research report, where they kind of interpret these numbers and they kind of put their own assumptions into it about what it looks like on a go forward basis. I think there's value to having both, right? Because this is something where you could just have like one team that kind of puts this together within the conflict community, and then you could have multiple teams, multiple analysts that interpret these numbers and then go and make their own forward projections about what this means moving forward. And I think the last thing I would say is that even though we have ideas about how we can value these different protocols, right now there's no agreed upon valuation frameworks. So I think it's something people want to stay flexible on, and also just not be I wouldn't want this report to be like, hey, here's how you value compound, and here what the numbers can look like in the future. That's kind of like a separate report.
Erok said these are boomer slides. I'm not sure if he was trying to throw shade, if he was teasing you, but I actually take that as a compliment, because this is exactly the type of kind of consistency and boxing that I think is going to get more people comfortable, because it's a more familiar analog to be able to look at this. So nice job with the boomer slides, Watkins. It's probably the only time that's ever going to be delivered as a compliment, at least from my perspective.
The boomers trained me well.
Last question here, and then I want to make sure that we have time if there's any other kind of community comments or questions to hop in there as well. I'd be remiss if we didn't at least touch on the analogs between kind of TradFi and DeFi in terms of a report like this and a structure. Because when I look at this, and obviously I've been outspoken on the policy side, but when I look at something like this, this really is the proof point for why a safe harbor can and should exist for decentralized protocols. Because in theory, you would think about something like Compound as a DeFi protocol. This essentially proves that you do not need a central company reporting on behalf of an entire community, because Watkins did this in a couple of weeks. I mean, it was a huge lift, and he's a talented analyst. But in terms of just creating the framework and something that can be standardized and replicated, we more or less proved that you don't need a company and a CFO and an investor relations team and your general counsel and everybody else to make these representations. In fact, you're probably going to have a more dynamic reporting framework if you can actually send this to a community. Now, Rob, that might not have been the case 18 months ago or 24 months ago, right? When Compound Labs was first creating the incentive mechanisms and kind of dropping the token and thinking about the gradual decentralization. But I mean, I think that's the purpose of a safe harbor, is to maybe go over a few years, kind of demonstrate some proof points, and at which time a centralized company would be able to hand over the reins. Without getting you into trouble, right? And being very delicate with the question. I mean, do you agree? I mean, do you think that this is basically showcasing the path and kind of the value in smart safe harbor based regulations like we saw from Commissioner Peirce, and is maybe the better way to think about disclosures on a go forward basis really around ownership and governance control, right? So like disclosing whether you have a certain percentage of the tokens if you're subject to a given regulator's oversight. How have you and your team thought about that, at least from a philosophical level, without like I said, getting into any situation that you're going to be saying, let me check with my GC.
Well, I don't understand 2/3 of the words you said, but I'll give you how I think about all this stuff. So, for 4 years now, since the very first day that we started designing and thinking about Compound, before DeFi was a phrase, before any of this existed, we said the advantage of a decentralized financial market is that it's radically transparent. In addition to being faster, cheaper, more fair, completely open, and all these other things, it's radically transparent. And that, theoretically anyone can inspect the state of every address, every balance, every market in real time. And this is what makes DeFi superior to traditional finance. That being said, this is the first time that we're getting what I would call, like Wall Street grade reporting on a decentralized platform like Compound, right? And what I like about this set of numbers is that anyone out there can validate them, right? Anyone out there can call bullshit, right? There's no ability, to do fraud or to, manipulate the numbers or to lie about them in a way that if you were just relying on some company to report their financials, there's problems with it all the time, right? And so, I hope that for both Compound and every other DeFi protocol out there, generating reports like these gets easier and easier and more standardized and more part of the culture and the ecosystem. And, this is better than what you're going to read in some companies' financial statements because you're guessing if the company is pulling your leg or not, right? With a decentralized protocol, all of this is able to be proven on chain. And, I haven't looked at any of these safe harbor proposals or anything like that. But what I do know is that this is the future and that this is a better approach to presenting the health of a financial system than anything that exists previously. Because not only is it packaged well, but anyone can call BS if there's BS.
Yep, you can fork it, you can add to it, you can question line items, and almost create like a GitHub repository where you've got open comments for any particular section of the report, and then most importantly, the root data that's being used, you can come to some at least gradual standardization. And that's ultimately real time. So it is, literally, 10 or 100x better, to follow that. It must be 10x better than the alternative rule, simply because you can compress the time period and you can replicate the reporting without having to have C-suite access. I don't know if there's anything that you wanted to close with or any questions you had, Watkins. I'm looking through some of the questions that the community had asked, and looks like we touched on a good chunk of them. The only one that I'll hop in on and answer real quickly, Conrad asks, is the source of this data and similar data for other platforms available on the Messari platform? Soon. It's locked in a lot of our reports, and our analyst team is working feverishly on developing the standards to actually get all this available in our screener, but that's going to be something in the 2022 realm in terms of when it's incorporated. Watkins, closing thoughts or questions?
Last question, I guess, from you. Yeah, can you hear me? I think that my screen is lagging.
A little laggy, but
you're good now.
All right, cool. Yeah. All right, cool. So last question would be just from, I guess, your kind of vantage point from Compound Labs. What are you excited about going forward in the next quarter, 2 quarters? I mean, obviously, in the report, you mentioned things like Compound Chain, Compound Treasury. And maybe you could speak to those or just any other things that you kind of have in just the Compound Labs pipeline specifically that you're excited about.
Yeah. So, what I'm excited about broadly is there's a lot of people that are building out the Compound protocol and the Compound ecosystem. And, what we've seen over the past really 3 to 6 months is the community taking more and more responsibility of all the different pieces of the protocol. So, Messari is starting to do some phenomenal reporting. Gauntlet just passed a proposal a few weeks ago to take over the risk management of the protocol. There's a lot of people talking about how to have more of an outsourced process and community-run process for security auditing and open source development. And so what I'm most excited about is the community taking over, and like creating processes around all of these things that are starting off with almost no process and, a lack of structure and creating structure around them and really accepting ownership, of this protocol that, belongs to everybody. So that's the first thing I'm really excited about. The second thing I'm excited about are, the community developers that are building the future of the protocol. So almost, everything is coming, all the changes to the code base, almost all of this is coming from community developers at this point. And Q3, we saw, some incredible effort. We saw some risks. Proposal 62, is a famous example now of, change to the code base of the protocol that wasn't secure enough, and it led to comp tokens that were reserved for future distribution going out prematurely. But it's a sign of increasing development from the community. And I'm extremely excited about that. At Compound Labs, we're one development team amongst probably 5 or 6 development teams now. And we're focused on really 2 products. One is Compound Treasury, and this went live in the 3rd quarter. It's not broken out in these reports yet. It's really, a business product on top of the protocol that anyone could build. It's not privileged or permissioned or unique to us. But we basically built an institutional on-ramp for dollars into the Compound protocol. This went live this quarter. You can actually go to compoundtreasury.com and see a website devoted specifically to Compound Treasury. This is the focus of Compound Labs. And it's an on-ramp that went live. And it's extremely exciting because I think there's going to be more on and off ramps between traditional financial markets and the Compound protocol. Hopefully we build the best one, but maybe it inspires others to build on and off ramps as well. The second thing, this was mentioned earlier, is Compound Gateway. And this is a very deep R&D project focused on building a cross-chain compatible version of Compound. And this is in continued development. This has gone slower than we would have anticipated. All L1 things go extremely slow. There's updates on the weekly developer calls every couple weeks. The community's, active in the testnet and participating in, understanding it and building it out. But this is the other focus, and it's a little bit slower than I would have anticipated. But this is separate of the core Compound protocol still. And so those are things I'm excited about. I think the future is bright. The one thing I'll say to anyone on this call and anyone listening is that you can be a significant contributor to Compound. You can write the future code of the Compound protocol. You can fill in as even a non-technical contributor in any myriad number of ways. We're living in this chapter 1 of decentralized protocols and DAOs and financial markets, and it's extremely exciting. And there's a lot to do. So what I'm excited about is hopefully someone listening on this call gets inspired to become the next major contributor to Compound.
That's very exciting. I think the grants program speaks to that. I think different contributors in the community, not only contributing, but also getting compensated for that as well, kind of speaks to that. And I think that's one of the most exciting parts about it is that you can contribute open source, code or any kind of open source contribution and really be compensated, not only just in, kind of just a salary or kind of a streaming payment, but also in comp, the equity of the system.
Yeah, I mean, eventually, smart contracts running on a blockchain are going to be paying everyone on Earth, right? We're at chapter 1 of this. And this quarter, we saw 2 community contributors start receiving compensation and basically payroll directly from the Compound protocol to them. So I think it's a sign of things to come. This quarter it was 2, last quarter was 0. Quarter 4 might be 1 or 2 or 3, who knows? 2022, I think we're going to see a big uptick in how many people essentially contribute and are rewarded directly by a protocol, both in Compound and other protocols as well.
Yeah, if yield farming was V1 and stake to earn and more active capital was kind of V1 of the earn model, we've already started to see play to earn with Axie and some of these games. We're starting to see actual work to earn models for taking on traditional tasks that would have been handled by full-time employees in a centralized organization. So I'd agree with that. I think like Watkins kind of hinted at, if we can be one of the CFOs for DAOs, I think that's going to be a major area of growth for us as a company, for us as a community, given that this is ultimately something that we're decentralizing through our hub, and I'd expect to see other variations and flavors of that. That's ultimately going to result in a very healthy Big Four accounting firm type of environment, I hope in 22, 23 and beyond. So I think that's a good place to wrap. Watkins, I'll give you the last word here as this was your baby, and I think at least judging by Rob's reaction from some of the folks in the chat, and hopefully some other feedback that'll come in. This is a really helpful launching point, and hopefully a good sign of things to come, not just for Compound, but for the broader DeFi ecosystem, crypto ecosystem in general that's governed by DAOs instead of companies.
Yeah, I think I largely agree with that sentiment. Yeah, very, very excited for future iterations of this. And personally think this came out well. And yeah, excited to see what feedback we get on how to make this better in subsequent quarters.
Terrific. Well, thank you all for tuning in. Thank you, Rob, for joining us today. We'll be sure to get some other Compound contributors on for the next iteration of this call with Watkins in January. I already see a couple of people, Conrad, Jake, that seem to be at least hinting at stepping up, but there might be others. So until next time, thanks. And if you're interested in learning more about our research hub, either as a project, then or as a potential contributor to work with Ryan and some of the other researchers on our team to produce reports like this in the future, check out messari.io/hub, and we'll be very happy to talk to you. So stay tuned, much more to come. Thanks, guys.
Thanks, everybody.
Have a good one.